Tariffs are essentially taxes placed on goods that cross international borders, imposed by governments on imported products. These taxes can make foreign goods more expensive, giving an advantage to domestic producers, and sometimes raising much-needed revenue for the state. For centuries, nations have used tariffs as a tool to shield their own industries from foreign competition or to fill government coffers. The logic is simple. By making imports pricier, local businesses can thrive, jobs are protected, and the national economy is strengthened. In the late 20th and early 21st centuries, however, the United States and many other countries shifted toward free trade, lowering tariffs and opening markets. This move was seen as a way to foster global cooperation, boost economic growth, and provide consumers with more choices at lower prices. But in 2018, the Trump administration's sweeping tariffs marked a dramatic and unexpected reversal of this decades-long trend, sending shockwaves through the global economic order. These tariffs, central to the America First agenda, were intended to combat what the administration called unfair trade practices by other nations. Yet, the reality was more complicated. The new taxes quickly led to higher costs for American consumers and businesses, who found themselves paying more for everyday goods and materials. Economists across the political spectrum warned that these measures would trigger price hikes, provoke retaliation from major trading partners like China and the European Union, and inject uncertainty into the business environment, making it harder for companies to plan for the future. The tariffs were broad, not targeted, and the costs fell mostly on Americans, over half according to Goldman Sachs. Farmers lost access to crucial export markets, manufacturers faced soaring input costs, and entire industries were forced to rethink their supply chains. As a result, supply chains were thrown into chaos, with delays, shortages, and rising prices rippling through the economy. The episode exposed just how deeply interconnected the global economy has become, and highlighted the risks and unintended consequences of protectionist policies in a world where nations depend on each other for goods, services, and prosperity. The stage was set for a legal and economic reckoning of monumental proportions, as policymakers, businesses, and ordinary citizens grappled with the fallout of a new era in global trade. The legal fight over tariffs, which had been simmering for months, finally reached the Supreme Court, drawing national attention and sparking intense debate across the country. The stakes were high, as the outcome would not only affect trade policy, but also set a precedent for the limits of presidential power. In a closely watched decision, the Supreme Court struck down the Trump administration's policy, declaring it an example of executive overreach that could not stand under the Constitution. The ruling was more than just a legal technicality. It was a dramatic reassertion of Congress's constitutional authority over trade and taxation, reaffirming the separation of powers that is fundamental to American democracy. Lower courts had already found that the president exceeded his powers by imposing sweeping tariffs without congressional approval, raising concerns about unchecked executive action. The Supreme Court's confirmation sent a powerful message. Only Congress, as the direct representatives of the people, can impose broad-based tariffs that impact the entire nation's economy. The administration had relied on the International Emergency Economic Powers Act, or IEEPA, a law originally designed to allow targeted sanctions in times of crisis, not to justify sweeping changes to trade policy or the imposition of widespread tariffs. The court firmly rejected the argument that IEEPA gave the president a blank check to rewrite tax and trade policy at will, emphasizing that such authority would undermine the balance of power. This landmark decision draws a clear and unmistakable line on the limits of executive authority in economic matters, ensuring that no single branch can unilaterally reshape the nation's financial landscape. It signals to future administrations that any fundamental changes to tariff policy must be debated and approved by Congress, preserving the democratic process and protecting the interests of American citizens. Ultimately, the ruling restores a crucial check and balance in U.S. governance, reinforcing the idea that power must be shared and limited to prevent abuse. Congress, not the president, holds the power of the purse, a foundational principle that ensures accountability and transparency in how the nation's money is managed. The Supreme Court's decision hinged on the separation of powers. The administration argued that IEEPA's broad language allowed the president to impose tariffs during a national emergency, but the court found that the Constitution gives Congress, not the president, the power to levy taxes and duties. IEEPA was designed for targeted sanctions, not for creating a nationwide tax regime. The law never mentions tariffs or duties, and the courts ruled that such sweeping authority was never delegated. The decision warns against using emergency powers to bypass Congress for domestic policy. It reaffirms that economic competition is not a national emergency, justifying unilateral executive action. The ruling restores predictability to trade law and limits the abuse of emergency statutes. The Supreme Court's ruling delivers a massive fiscal shock, erasing trillions in projected tariff revenue from the federal budget. The government now faces tough choices: cut spending, raise new taxes, or increase the national debt. For businesses, the end of tariffs means lower costs and eventually, lower prices for consumers. However, years of supply chain adjustments and pricing changes won't unwind overnight, creating new uncertainty. The tariffs distorted the economy, raising costs for both producers and consumers. Their removal should boost U.S. competitiveness and ease inflation in the long run. The government's immediate fiscal pain is the price of ending a damaging policy. Lawmakers must now grapple with the fallout and chart a new fiscal path. The economic lesson is clear: protectionism comes at a steep cost. The government now faces the daunting task of refunding up to $80 billion in unlawfully collected tariffs. This staggering sum, amassed over years of aggressive trade policy, must now be returned to its rightful owners. The scale of the financial reversal is unprecedented, and the Treasury is scrambling to assess the full impact on its already strained resources. Treasury officials warn this could create a severe cash flow crisis, forcing the government to consider issuing new debt or making deep, painful spending cuts. The sudden need to find billions of dollars threatens to disrupt carefully balanced budgets and could even shake investor confidence in the nation's financial stability. For thousands of American businesses, however, these refunds could be a much-needed lifeline after years of squeezed margins and uncertainty. Many small and medium-sized companies have struggled to stay afloat under the weight of these tariffs, and the prospect of receiving substantial refunds offers hope for recovery, investment, and even job creation. The political pressure to repay these funds will be intense, with business owners and trade groups demanding swift compensation for what they see as years of unfair, illegal taxation. Lawmakers from both parties are already feeling the heat from constituents, and the issue is quickly becoming a flashpoint in national debates over economic justice and government accountability. Processing millions of claims will be a logistical nightmare, likely requiring the creation of a special administrative body just to handle the sheer volume of paperwork and ensure that refunds are distributed fairly and efficiently. The risk of errors, delays, and even fraud looms large, adding another layer of complexity to an already daunting challenge. The irony is stark. A policy originally designed to enrich the Treasury and protect domestic industries now threatens to drain government coffers at a breathtaking pace. Instead of a windfall, the Treasury faces a potential exodus of funds, leaving officials scrambling to plug the gaps. The episode has become a costly, self-inflicted wound for the government, exposing flaws in oversight and decision-making at the highest levels. The repercussions will be felt not just in Washington, but across the entire country. The refund battle will dominate Washington and business headlines for years to come, fueling debates over trade, taxation, and the proper role of government in the economy. Every new development will be closely watched by the public, the press, and the markets. The legacy of the trade war is a fiscal and administrative mess, one that will take years, if not decades, to fully untangle and resolve. President Trump responded to the Supreme Court's decision with defiance, framing it as a betrayal of American workers. He insists tariffs are vital for national security and vows to continue his trade agenda by any means necessary. Trump is exploring alternative legal avenues, notably Section 232 of the Trade Expansion Act, which allows tariffs on national security grounds. Expanding Section 232 would invite new legal challenges and political controversy. Critics argue this stretches the definition of national security beyond reason. Still, Trump's strategy is to keep his trade war alive and rally his base against the judiciary. The legal and political battles over tariffs are far from over. The fight for America's trade policy will continue in the courts and on the campaign trail. The Supreme Court's decision sent shockwaves through global markets, ending years of uncertainty, but sparking new volatility. Stock markets and currencies fluctuated as investors digested the sudden policy shift, America's trading partners welcome the ruling, hoping for an end to retaliatory tariffs and a return to normal trade flows. Yet, uncertainty remains as Trump signals he may seek new ways to impose tariffs. The world is watching to see if the U.S. will embrace rules-based trade or revert to protectionism. The unpredictability of American trade policy has forced countries and companies to rethink their reliance on the U.S. market. The ruling affirms the rule of law, but political volatility lingers. The global economy is left to navigate the aftershocks of America's trade upheaval. The Supreme Court's decision marks a turning point for America's role in global trade. Removing illegal tariffs should lower costs for consumers and boost competitiveness for businesses, but the fiscal crisis from potential refunds and years of disrupted supply chains will complicate recovery. The ruling reasserts congressional authority and may lead to more stable, predictable trade policy. America faces a choice: pursue isolation and tariffs, or embrace negotiation and cooperation. The trade war has shown that tariffs are a tax on Americans, not foreign countries. The lesson is clear: protectionism is costly and ineffective. The path forward demands smarter, more collaborative economic leadership.